The market's up, Bitcoin's up, and the week hasn't even started yet. Take a look at this, guys. Things are looking very good in the crypto markets. Just at this second, updating you late at night here because this is happening right now. Bitcoin currently trading at a price of $113,678. That means we are challenging this high that we put in on the 21st of October, right up there at $114,000. That means, if you've been paying attention, that my Bitcoin long position is ever so close to break even. So feeling pretty good about staying in that, weathering the storm, not selling out of that position early. Didn't manage to add a great deal more to that position, but we are still in at 0.9 BTC at an average price here of $113,739. So once again, we are just coming back into break even. We're a little bit shy of that right now, $77.34 down. I think that there's a good chance we can sustain this move. If we take a look at the liquidation map, you can see, once again, this is why we can't have nice things, right? The lemmings have jumped in on long leverage, balls to the wall once again because they saw some green candles. But if we take a closer look at the distribution here, you can see that, zooming in a little bit, the inflection point of the short liquidation risk is up at just shy of $115,000, so $114,854, and there is $183 million of short liquidation risk there. So just shy of $115,000 puts us right about here on the chart, which you can see would basically just mean or represent a break of this local high that we put in on the 21st of October. A break of that high would also confirm an uptrend, whichever way you slice it, from the lows that we put in on the 17th of October. Now we could very easily come up and just clip that high and pull back again. I wouldn't be panicking in that situation yet because we have put sufficient distance right now away from the lows, and it does look like this is playing out again like we've seen historically with some of these big drops. And of course, some of these big drops I'm talking about recently, this massive historic $19 billion liquidation event that brought us down from brand new all-time highs to as low as $102,000 on some venues. If we take a look at the volume distribution of this move up, we draw in that fixed range volume profile, we can see a volume node, or the point of control, at a price of $108,160. Look, from here, there is plenty of long liquidation risk in the market because, once again, too many people, in my opinion, have jumped in on this move leveraged long. We could see some forced selling in the form of liquidations, in the form of stop losses going off from this move. I would be very happy to bid the point of control in that case. I'm not so sure we're going to see it though. Honestly, I think it is more likely, in my opinion, from here that we come up, break these highs, sweep these highs, potentially a little bit of a pullback from there, and then go on to start catching some of this short liquidation risk off guard on the market. Once we get into the thick of that, that is when this could really run away to the upside, because once more, there is $5 billion worth of short liquidation risk up at the all-time highs now, and plenty of liquidation risk down from there. Once again, the point that I'm looking at is just shy of $115,000. That is where, in my opinion, peak short liquidation risk lies in the market. And that is in terms of not just the highest number, but it's where this is peaking out. It is where most people are likely to get caught off guard. And when shorts are caught off guard, they are forced to buy onto the market. That causes a sudden demand shock, and it is when these runs can really go wild and start extending to the upside. So there we go. Currently challenging local highs. This is the next point of interest. This price right here, we are just shy of that now at $114,000, but I'm very happy because my trade is now pretty much break even, and the thesis is playing out, right? It is now, to me, validated that it was worthwhile holding onto that trade if we continue this move to the upside. Also, pretty interesting news today. We are very used to talking about the ETF flows, okay? Once again, ETFs are an instrument that institutional investors use to get exposure to the Bitcoin markets without actually buying the underlying asset themselves, because the ETF takes care of that for them. And we've spoken about this a lot on the channel. ETF flows are an interesting indicator to look at. Sometimes the institutions can behave like retail, but generally they're behaving a little bit more sensibly than retail is doing. When I say behaving like retail, I mean doing silly things like buying the tops, selling the bottoms, etc. But usually they are behaving slightly better than retail is. Take a look at this. JP Morgan is about to let institutional clients pledge BTC and ETH as loan collateral as soon as the end of the year. This is reported by Bloomberg. JP Morgan reportedly plans to allow institutional clients to use Bitcoin and Ether as collateral for loans by the end of 2025. The shift brings crypto closer into bank lending plumbing and follows wider Wall Street moves to expand digital asset services to clients. This is really big news. Okay, it means a couple of things. First of all, it's just another step forward in terms of legitimizing Bitcoin as an asset for serious investors to hold on to, serious big money to hold on to. I think, generally speaking, we're kind of ahead of that, right? I think the world has quite clearly woken up to why that is a good thing. But steps like this are just further validating the legitimization of that. The big thing I see here is it means that basically there's just one less reason for these big holders to sell, because now they can pledge BTC as collateral for loans. They can get liquidity against their BTC without selling it onto the market. And that means potentially much less selling by these big holders onto the market. Very big news, whichever way you look at it. But there we go. Bitcoin currently $113,632. It looks like we are making strong moves to the upside, strong moves to getting out of this nightmare situation that we were thrown into, provoked by Trump's tariff threats against China, but ultimately fueled by excessive long leverage in the market. Just my opinion, just shared with you for entertainment purposes. Nothing I say should be considered financial advice, but thanks so much for watching. Plenty more to come.